Talk to us a little bit about this kind of thinking here, because it's not just India that's facing this. There's a lot of folks in the EM space, Brazil, Mexico, among others, that now have to position their monetary policy with respect to expectations on the trade front. How do you position for that?
I think just like companies, they're going to wait as long as possible to react, just like the Fed is doing as well. So I think one of the themes that many people got wrong, including myself earlier this year, is that we thought at some point there'd be a binary tipping point for when tariffs would impact. Because the stop-start policy of Trump's approach to trade, it constantly changing. In fact, from a company point of view, you don't want to change your prices or react to tariffs until you're sure it's a new sustainable equilibrium, which we've still not hit yet, which means that everyone's kind of delaying. And because these tariffs were so well flagged, people front-loaded them in terms of supply chains. And it's the same from the economy point of view. We still don't know what the lasting level of tariffs are in any country. India is probably particularly in that point of view because they're in the firing line right now. But everyone's assuming they're going to negotiate a slightly better deal, which means how can you react at all yet to when you've got no idea what the impact will be?
In terms of drivers looking forward, we've got this sort of art of the deadline from Donald Trump. We're going to get that India thing later today. They say he's going to give the tariffs there. Then by Friday, we should get secondary sanctions potentially on Russia. We look ahead to next week for a potential new Fed governor, pharmaceutical chip tariffs, and then, of course, the trade truce between China and the United States expires next week. What for you is the most significant?
I think that the main takeaway is this is not ending. All these deadlines are all fake.
Right.
I mean, in terms of that, it's going to be a continuing rolling issue. And I think because Donald Trump has flagged that he'll use tariffs for geopolitical goals and not just on trade policy, we can't expect a perfectly sustainable equilibrium. What we need to do is we need to know at what point are we kind of close enough to the end game. And I think we are getting closer to that point. So it's not any one deadline because no one takes any of these deadlines seriously. No one takes any final rate of seriousness. But I think people are going to start working out who are the rough winners and losers in this new world. And it seems like India is one of the losers.
Okay, when it comes to one of the deadlines, the governor pick, I mean, he probably is going to make it often. The seat is going to be vacant as of August 8th, which is 2 days away. Do you think that there's a risk that there might be some wild card candidate that no one's talked about that sits down and that spooks the market in this low liquidity August type of environment?
Obviously, that's a risk. But I would say that everyone's going to assume that any candidate that's going to be picked is going to back Trump's Fed cuts. So we're just expecting a dovish candidate. So I think it's going to be hard to spook the market in that regard. It's not like we're going to suddenly get a hawkish candidate. Warsh is the most obvious candidate because he's available at the moment. He's the favourite in the betting. He's going to be dovish. That would be. So I think anyone who's in line with that was expected to support rate cuts immediately won't spook the market. Now, if it's Hassett, I think we get an even more dovish outcome with potentially an aggressive kind of twist steepener in the curve. So I think that's the kind of secondary risk. Yeah, of course there could be some kind of tail risk candidate, but I think it's important that a tail risk candidate won't spook the market. It just leaves the market a little bit confused, but we get the same reaction. If it is Warsh, any dip in yields won't sustain because it's expected.